Welcome to the Real P&L Trading Show, where I share my real P&L on 3 accounts and share my proprietary Safe Wheel trade system for free. Uh, Please type in the chat that you can hear me okay. I want to test my audio and my video. Video looks good from my angle, but I can't really test my audio very well without your support. There might be a better way to do that, but I always like to get feedback. Charles, thank you. You can telling me that you can hear me okay. Also, be sure to post any questions that you might have so I don't end the broadcast before those questions come out, and then I can answer them. Let's get started here. The first thing I'm going to do is talk about the Earnings Edge. This is my Earnings Edge account. Netlick. Oops, this is not my Earnings Edge account. Let's see. That is my Premier Level 5 account. Let's go to the... See, this is my Earnings Edge account. Yes, so this is my Earnings Edge account here. Last week, did not make a trade. Nothing fit through the filters. There's not a lot of earnings going on right now. So because of that, sometimes we don't have any trades to take. And I'm not going to just take a trade just for trading's sake. I like high probabilities. So you can see the account is 10,802. It was 10,799 last time. So maybe I made some interest or something. But yeah, no trades taken. Started this account with $5,000. And now it's worth 10,800. So let's see here. Go into the spreadsheet with the Earnings Edge. That's the last trade I made. Since my update in late 2022, actually my record is 2019 and 5. Average win around 882, average loss around 515. So 50% win rate. And when you can get a 50% win rate, your wins are higher than your losses, come out ahead. And you can see what happened in 2022, 63% versus the S&P, minus 20. And 2023, tried to keep up with the S&P, couldn't quite do it. Risk-adjusted returns, the S&P is a better place to be. This is more risky than the S&P 500, this Earnings Edge. And this 10,799 is pretty accurate. What is it, 10,802? So not much of a change there. So you can see what's happening this year, up about 13% versus, let's see what SPY is trading. 523.58. S&P's up 10% this year. If you look at the overall totals, since I started this account in 2022, up 116% versus the S&P 10%. Now, on a risk-adjusted basis, the S&P 500 is a better risk. It's not going to have as much drawdown, but not by 10 times. So you can see that the Earnings Edge is outperforming even on a risk-adjusted basis. What is that number? I don't have that number off the top of my head, but this thing does draw down. I think I had a significant drawdown here. Yeah, 670% at one point, but that was before I changed the rules. So probably 36% is probably more realistic. Actually, the S&P has drawn down 35% in 2020, so maybe the risk-adjusted returns aren't as bad as I claim. They might be closer to the S&P than what I'm saying, but obviously 116% to 10% outperformance for the Earnings Edge. And I did open the cart for the Earnings Edge last week and closed it, or 2 weeks ago, and I closed it last week. So the Earnings Edge really is not available, but I like to showcase it, show people what's going on with it. All right, Premier Level 5. So I showed my P&L, right? Yes. All right, the Premier Level 5 account, Netlick, 33,262, 202, 33,217. So it's changing a little bit here and there. This is not accurate. It was never 31,732. So for some reason with Thinkorswim, when you trade options on /ES, you don't get accurate numbers from them. The only accurate number you get really is like the live actual net liquidation number at that moment. But was a 33 202. Let's put that number in there. It's not, didn't move too much. You can see that it is underperforming this year. Outperformed because I started April 8th, so not not in the beginning of the year. So it outperformed, but not as much. Underperformed in 2023. Underperforming this year. This is a 5% drawdown. This is the largest drawdown I've ever had with the system. I think even, well, there's in back testing, there's a little more, there's some larger drawdowns than this, but this is pretty heavy. I don't like drawdowns. I don't like trying to dig out of a hole. That's why I like the PL5. So once there is a hole, it's not too deep. It's easy to dig out of. And that's what's happening right now. And the reason for that is because this particular system doesn't perform as well as the market and bull markets, but when there is no volatility and a bull market, that's when it underperforms. So you can see the results here, 28% versus 10%. But the risk-adjusted returns, I get about 1/3 the drawdown. So if you multiply this times 3, it's around 30%. So it's pretty even, a little better on a risk-adjusted basis, the PL5, but not significantly. So that's what's happening with the PL5. But another thing is, you notice that I don't hide my losses. I don't know if you've ever seen some other instructors, and they'll show you some losses, but they won't give you the overall total if they're down, right? If they're down overall and underperforming, you don't really see that. You see them having a few trades here and there that don't make money, but overall they're vastly outperforming, right? That's just not realistic. There's going to be times of underperformance. That's just the way it is when you create a portfolio. And I'm not going to hide that. I'm going to show you. Okay, so that's the PL5. Let's talk about the safe wheel. What's going on with the safe wheel? Put the number in here. So the safe wheel account, this one. Yeah. So this is pretty accurate. Let's see, 6888. So it really hasn't moved much since last week. A couple of dollars. You can see the safe wheel does quite well. It's doing really well. 2022 outperformed by quite a bit, 40%. Underperformed in 2023, but and is kind of keeping up with the market in 2024. But the drawdowns are about half. So on a risk-adjusted basis, I mean, you could almost double this number here. But you can see since the beginning of 2022, the market's up around 10%. These safe wheels up 37. Plus, it's got a better risk profile, like lower drawdowns. So it's vastly outperforming. And I've traded this account right in front of you. So everything, all these percentage, everything you see here has been done live, except for the little $5 call that I buy on Fridays. All right. So that is the safe wheel. As far as results, and you can of course see my net liquidation here. Okay, so I'm not hiding that. All right, and you can also see everything that's been traded in this account. Just these two stocks, options on these stocks, and the stocks themselves. You can see with LI this year, I'm down $18. So I'm pretty much at break even with LI. I made some money with DKNG before I got out of that stock and started trading LI. So let's take a look at the actual positions and see where we are, or see where I am, I should say. So I own 100 shares of LI at $36.50. So I was assigned at $36.50. Remember, this stock was pretty crazy. Look at the chart. You could see that since the beginning of the year, this thing has been all the way down to 26 and all the way up to 46. So it's pretty volatile. And if you were trading that traditional wheel and you were up here and you started trading that traditional wheel, you'd be getting hurt pretty bad right now. That's not what we do. I do the safe wheel. That's why it's safer than the wheel. I've got 100 shares at the 36.50 level. I have this long call. Of course, I paid about $4 for it. a relatively insignificant hedge that I use. And I have my put hedge here. So the couple questions on my put hedge to start managing here. How many days in trade? Is it under 100? No. Okay, so it's good. And is it close enough to the price? Is it within 70% of the price? Well, 70% of this is around 22 or 23, and this is a $28 put. So it's definitely close enough to protect. So I don't need to do anything with this put hedge. It passed through the two filters, or the two questions that I ask it, to see that it's viable. So my next goal is to, because I own 100 shares, sell a covered call at 36.50 or higher and get at least, say, 30 cents or $30 for it. Let's take a look. And I want to do it in the near term that expires this Friday. So 36.50 here. No way. I can't get anything. I can't get anything all the way until I get to around 32.50 is when I can start getting the premium that I want. Actually, around 32. So I cannot sell a covered call. I mean, I could, but I won't sell a covered call here, because if I sell it here at $32 and then it gets called away, I lose $450. So I'm not going to take that kind of loss. And I have my put hedge protecting me if it keeps going down. But what I'm going to do is open up tier 2. Now, I did this last week. I sold, I don't remember which put that I sold, but I did sell a put and did not get assigned, so I don't own 200 shares. Did I show the net liquid? Yeah, I should. Okay, let me make sure that's up there. So I'm going to go ahead and again open tier 2. I like to go here, right about where I could get that $30, or where I could get the enough premium where I could possibly trade here at this strike. Then I like to go one further and collect here. So I'm going to sell 130. One of the 30s, $30 strike. I actually own the $30 put hedge, so that's this thing starts going in the money. So does my long puts go in the money too. This one here, I'm going to do one, right? Because between $5,000 and $10,000, I do 3 put hedges and 1 traditional wheel. So 41 cents, probably what I'll get. I don't know, maybe $40. I'm going to do one here that expires. Let's execute this. Okay, so that did fill. So I collected $40. Now I'm basically long 200 shares. If I get assigned here, I'll be long at 36.50 and long at 30, or I can keep this premium if the stock doesn't go down below $30, and I'll just keep this premium. And that's what happened last week. Okay, so that is the trade for the safe wheel. And I'll go ahead and look at, see if you guys have any comments or questions. Let's see here. And Will was going to try to get me on the April Fool's joke, say that he couldn't hear me, but he didn't do it at the right time, so he didn't get me. Let's see, Will. I know you have to sell the EE all year round, but wondering what time of year you consider it best to buy the subscription, maybe close to Apple earnings. I mean, the last couple times I've opened the cart was right before the earnings kind of got heavy. Like, so next week, or maybe the week after, is when the earnings start really coming in, where there's going to be a lot of stocks to choose from. And so when there's a lot of stocks to choose from, that's when I like to kind of start up. So far, that's what's happened in the last 2 times I opened the cart. It was right there before like the heavy earnings cycles began. Less is more. In the safe wheel, once assigned the first time, do you ever play both sides? Sell a cover call and a put? No, I'll just stay with the one at a time. That's actually, that's not too bad of an idea to play both, basically sell a strangle, I guess. But no, I only play one side at a time. So I'll try to play the covered call, and if I can't, then I'll open that second tier like I did today. It's possible I'll be long 200 shares next week, and then I will be looking to sell something that will get me out of the $30 long shares, my basis there, and something to get me out of the 3650. Which I probably what'll happen is I'll be able to sell something against the $30 cost basis, but I won't have anything to sell against the 3650. That's probably what will happen if I get assigned. But I do one at a time, and I won't do calls and puts. I won't sell calls and puts at the same time with the safe wheel. Didn't set it up that way, and I didn't backtest that way, so I don't know what the numbers would look like. It's not a bad idea. Some guy regarding dividends. Do we need to make any considerations for them in the EE or safe wheel? I don't consider dividends. I don't look at the dividends. Let me think about that. Definitely not for the earnings edge. Here, I am not considering the dividends because I have this, because I'm hedged. I'm not really thinking about dividends. Any other impacts from corporate actions we should consider before entering a trade? No, I'm not concerned. Let's say that there's some type of an event coming up, a binary event. I'm still not concerned. I'm not, because of the fact that I'm playing both sides, right? I actually would love for the LI to just crash down to like $20. That would be phenomenal. So obviously, I'm not concerned about some type of binary event, or if it just crashed up, right? I would be okay too, because I own the $35 call. So it crashed up to $45. I'm fine. So crash type scenarios are huge moves are actually really good for this system. I could make a really good chunk of money. Say LI gets a takeover bid and it goes to $50. Oh, I'm going to be sitting pretty. So yeah, I'm not worried about that. Well, you doing real estate in California? Ever nervous on squatter rights there? Will California ever go full commie and not allow private property? My wife and I have another property, but that's pretty much all I have right now. So I'm not worried about squatters because I have renters in there. But yeah, am I worried about squatters? Yeah, I put on when the house is vacant, I put a alarm system in there, so to get them out right away. Definitely concerned about that when it's vacant. Ilano, can you explain again why you can't do a covered call on LI at the 32 strike? Because when I got assigned, in other words, when I have a cost basis of 3650, so when I sold the 3650 put and the price of LI went below 3650, and therefore I was forced to buy the stock at 3650. Now, if I sell a covered call, whatever strike I sell it at, I'll be forced to sell my shares. I don't want to buy shares at 3650 and then sell them at $32. I want to at least sell them for 3650 or more, because I don't want to take a loss on owning shares, because that's one hole that's really difficult to dig out of. Right, that's why I have this put hedge here to cover me if this 100 shares that I own goes down significantly. So hopefully that makes sense. Is it because it was assigned at 3650 originally? Yes, that is the reason. Got to work on the timing, just like in the trades. Yeah, as far as trying to get me on the April Fool's joke. Jason, if the returns are better with the SafeWheel than PL5, why not use SafeWheel for a larger account? What benefits does the PL5 offer over the SafeWheel? Right now, it looks like I should have been doing that, but the situation is the SafeWheel can draw down much more than the PL5 based on backtests, right? And hold on, the sun is kind of killing me here. Yeah, so based on backtests, hold on a second. Well, that's never happened before. Okay, so if the returns are better, right? So I don't like the amount of drawdowns that I would see with the safe wheel in a large account. That's just me. I mean, some people are okay with larger drawdowns. I'm not. So I'm super conservative, and even the drawdowns on the S&P are a little bit. They're too much for me on a larger account, relatively large account. And so that's the reason behind it. Really, I just don't like large drawdowns. So the PL5 gives me that. And that's really the reason. You have a tip jar for subs to donate when that EE hits really good. I guess. No, I don't actually have a tip jar. Let's see what Will says here. Wonder if the market gets too scared about squatters or lower the price houses like in Florida where DeSantis passed pro-landlord laws. Yeah, I haven't been really paying attention too much to real estate. I am actually a licensed California real estate broker, but I don't practice. I don't use my license, so I'm not really in the market. But I do pay a little bit of attention to it. What's this more? I was playing with the safe wheel and dividend stocks. There are some opportunities, but they don't seem to work over time. The premiums tend to be lower over time. Any thoughts about these types of stocks in the wheel? I'm not worried. I would trade them if they have the premium available. Remember, we want to be able to sell a call or a put or a call out of the money, and we want to be able to collect at least 1% of what that stock is worth. And like you said, a lot of those stocks don't have that type of premium. The premium's too low to be worth, in my opinion, to be worth trading the safe wheel. So that's probably why I don't have a lot of dividend stocks. I don't even know if LI pays a dividend. I don't even pay attention to it. That's not a factor in my decision making. But probably you're correct. If it is a good dividend stock, it's not going to have the premium. It's probably more a mature company, right? And they don't really move around a lot and don't have that premium when selling the options. Okay. Well, any other questions here before I wrap it up? All right. In parting, I'd like to say this. If the P&L is not real, what else are they trying to conceal? I'll be back next week.